Pltr stock news. Will the Palantir stock rally continue in 2024? Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. The stock value of Palantir Technologies, a company specializing in data analytics software, has maintained a relatively consistent trading range for the past 7 months. This is noteworthy considering the increased adoption of Palantir's artificial intelligence-driven solutions and the emerging signs of the company making strides with commercial enterprise customers. The limited movement in Palantir's share price is not unexpected, given the substantial increase in the company's valuation preceding the alignment with its underlying fundamentals and financial performance. Recent customer deals and insights from management during quarterly earnings calls lead me to anticipate a continued acceleration in Palantir's revenue growth rate. While there are doubts about whether this enhanced top-line growth will sufficiently justify Palantir's current market valuation, it appears more probable that the company's stock value will be influenced by the buzz around artificial intelligence technology and positive investor sentiment towards growth stocks, rather than the core performance of the business. Ongoing discussions among market analysts persist regarding the substantial nature of Palantir's business model and the debate over whether the company can be truly classified as a pure enterprise software vendor. This debate gains particular significance in the current landscape saturated with excitement and interest in artificial intelligence. In my previous discussions on this matter, I posited that the labor-intensive services aspect of Palantir's business may not necessarily be a drawback. Rather, it could potentially function as a competitive advantage, given that the extensive services needed for software implementation create substantial switching costs for customers who have adopted Palantir's platforms. While Palantir is expanding its portfolio with software solutions that target diverse applications like process mining, augmented reality, and agile software delivery, its fundamental operation revolves around a data integration and analytics platform that delivers actionable insights to customers. The incorporation of artificial intelligence is expected to enhance the value of this platform, yet I believe the adoption of AI doesn't fundamentally alter the nature of Palantir's business model or its future prospects. Notably, in September 2023, Palantir introduced a new offering called Palantir Government Web Services, specifically designed to assist emerging technology companies in operationalizing and commercializing their software innovations, with a focus on government sector customers. Palantir's foray into new offerings through GWS includes FedStart and Apollo. FedStart provides accreditation services to assist technology vendors in navigating and expediting the process of gaining access to sell software for the US federal government and intelligence agencies. Apollo, on the other hand, is an autonomous software delivery platform designed to simplify the complexity for technology companies in delivering and deploying modern software systems. These products signify Palantir's attempt to create a fresh revenue stream by leveraging its expertise in the government technology sector. Realistically, however, GWS may not become a major contributor to Palantir's revenue in the short term. Palantir's AIP, an artificial intelligence-powered solution, enables organizations to securely and controlledly utilize large language models for extracting valuable insights from their data and orchestrating connections between tools, user actions, and other AI models. Despite the powerful capabilities of AIP, the market currently sees various technology vendors offering similar AI-powered data analysis functionality and orchestration capabilities. Presently, there doesn't seem to be significant differentiation among competing vendor solutions in this domain. Palantir's management appears to acknowledge this lack of differentiation, expressing the belief that the real value is likely to accumulate at the application layer and workflow integration layer. Vendors effectively addressing skills shortages among customers are expected to perform particularly well in this landscape. Palantir's ability to seamlessly integrate AI capabilities into its data platform, facilitating actionable insights and improving user productivity, is expected to be the primary driver of value creation, surpassing the significance of the underlying artificial intelligence technologies themselves. The company is strategically positioning its knowledge ontology as a potential source of competitive differentiation, asserting that this ontology enhances the reliability and trustworthiness of answers provided by large language models. While the actual validation of this claim in practice remains to be definitively demonstrated, its effectiveness could potentially address one of the major concerns associated with large language models at present. Palantir's AIP solution is already in use by nearly 300 organizations, representing close to 2/3 of its total customer base. Notably, the number of users on AIP nearly tripled during the third quarter alone. In Q3, Palantir intensified its go-to-market focus on AIP bootcamps, which are intensive training workshops designed to rapidly upskill customer teams on building applications with AIP. This strategic shift highlights Palantir's commitment to fostering the effective utilization of its AIP solution among its customer base. Palantir asserts that its AIP bootcamps are positively influencing key financial metrics, including the payback period, customer lifetime value, and sales cycle times, resulting in the expansion of existing customer contracts. However, the concrete financial impact of these bootcamps on Palantir's published results remains unclear at this time. The recent surge in Palantir's total revenue growth is linked to a substantial increase in its commercial customer count in the United States. Despite this growth, the net dollar retention rate among existing customers is comparatively low. Palantir diversified its product offerings by introducing a mixed reality service and an immersive command and control application developed on its mixed reality platform. The mixed reality service leveraged the 3D game engine from Unity Technologies, ensuring compatibility across a variety of devices and hardware. While mixed reality applications may remain niche, they provide an intuitive means of visualizing and analyzing data for specialized use cases. The immersive command and control application seamlessly integrates with major U.S. Army command and control systems. Unity Technologies experienced significant interest and customer traction in 2022 for its real-time 3D and digital twin capabilities, particularly among industrial enterprises. However, demand appears to have decreased notably as of 2023. In 2022, Unity reported over 100% year-over-year revenue growth for its Operate Solutions division, which includes digital twin solutions. The high customer demand led to challenges in service delivery, prompting Unity to collaborate with partners like Booz Allen to provide professional services. This suggests a considerable demand for real-time 3D use cases, particularly in sectors such as government, defense, and national security. In the third quarter of 2022, Palantir experienced a 17% year-over-year growth in total revenue, reaching $558 million, excluding the impact of certain strategic commercial contract losses. Q3 revenue showed a 21% increase compared to the previous year, with commercial revenue leading the growth at 23%, outpacing the 12% growth rate in government sector revenue. This robust commercial revenue growth was primarily driven by new customer additions in the US, although Palantir's international commercial business faced challenges in continental Europe. While the US government business was relatively weak in Q3, Palantir anticipates growth to re-accelerate despite ongoing budgetary uncertainty in the near-term government spending environment. The company forecasts a total revenue range of $599 million to $603 million for the fourth quarter, representing approximately 18% year-over-year growth if achieved. Although Palantir's revenue growth rate has only modestly accelerated, positive indicators are emerging in terms of customer deals and contract bookings. Q3 saw a 29% sequential increase in total contract value booked, reaching $830 million. Customer deals closed for Palantir's US commercial business in Q3 rose by 140% compared to the same period last year. Management notes a noticeable acceleration in larger deal sizes and shorter sales cycle times. Palantir's total global customer count increased by 34% year-over-year in the third quarter, with new customer growth increasingly driven by additions to the commercial business segment. However, the net dollar revenue retention rate was 107% in Q3, attributed to weakness in the commercial segment in continental Europe. Revenue expansion within Palantir's top 20 customers remained robust, with a 13% year-over-year increase in total revenue over the trailing 12 months. Palantir is consistently profitable on a GAAP net income basis and generates healthy free cash flow. The company's financial margins continue to improve gradually with increased scale. However, the heavy use of stock-based compensation is currently a negative factor weighing on GAAP profitability. Despite this, there is an expectation that Palantir will become a very profitable technology vendor as the business matures. The substantial stock-based compensation at Palantir is expected to decrease significantly over time as a percentage of revenue, alleviating concerns around its impact on the income statement. However, investors bullish on Palantir should be mindful that a significant increase in the share price could make stock-based compensation considerably more expensive than reflected on the income statement. Despite positive indicators suggesting an accelerating growth rate, job posting data from Palantir doesn't strongly indicate expectations for a dramatic surge in growth. The most optimistic interpretation is that AIP bootcamps and AI product capabilities are enhancing scalability, reducing the need for additional sales headcount to support growth. A more cautious interpretation could suggest lingering uncertainty about the sustainability of recent growth or ongoing adjustments to accommodate the increased headcount from 2021 and 2022 hires. Beyond the hype surrounding artificial intelligence, favorable aspects of Palantir's business model and competitive positioning are evident. As the company scales, its software-centric revenue model and data platform offerings are likely to result in high customer switching costs once implemented. Palantir has a notable track record of securing large enterprise-wide software contracts with government agencies and Fortune 500 customers, an achievement many technology vendors find challenging. Considering these factors, Palantir is poised to become highly profitable over time. While the current valuation may seem stretched, the stock is likely to experience near-term volatility. Hype cycles often oscillate between periods of irrational exuberance and pessimism before aligning with underlying fundamentals over the long run. Despite potential short-term fluctuations, the belief is that Palantir's stock should deliver reasonable returns for long-term investors. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!